Good evening, good afternoon, depending on where you're at. Welcome to the After Market Monday with the Active Trend Traders. I'm Dennis Wilborn. I want to welcome you to today's session. Got a lot of stuff to cover. I have 1, 2, 3, 4, 5 entities to cover, looking into earnings and just a little bit of discussion about what the market was showing us today, which was basically kind of some specific downside type kind of thing. I talked about that in the article I wrote on the Art and Science of Active Trend Trading that was posted to the website. And for your information, the website will be down starting on Thursday of this week. It'll be down for a day or so because I have a new website being designed that'll be a lot more user friendly and easier to get around on. I want to remind everybody that all the materials that we do present are for training purposes only. Traders should always paper trade any new method prior to the risk of their own personal capital. The objective of the After Hour Monday session is just to basically provide some timely, actionable intel at the beginning of the week. Normally, Mondays of all the days of the week tend to be not really great days to jump into trades, or if you want to jump into a trade, you wait towards the end of the day, simply because there tends to be a little bit of a weakness on Mondays. That's just the tendency of Mondays. And then basically, and so I try to not be too heavily invested or make too many moves on Monday. And so that's why having this session kind of can set the picture for, or basically paint the picture for us what may be going on the rest of the week. So we'll do a market review. And so are we going to get more downside with, definitely I think we're going to get more volatility, but we had an important signal on Friday that the market kind of followed through on the day, but we'll talk about that briefly. Stocks and ETFs that are potentially setting up. Remember, have patience, stand back, and respect the rhythm of the market. This is where we're sitting as of close a bit, or about 12:15, about 45 minutes before the close today. The market did come back a little bit, and the active trend trading actually came back a little bit also. So let's take a look and sort of through the rest of the slides here. Basically, when we're trading, we're going to expect 4 different outcomes. 1, win a little. 2, lose a little. 3, win big, lose big. Our objective, and typically people will convert and start trading a mechanical type system because they want to eliminate number 4. And if we can eliminate number 4, which is basically our biggest risk, the mechanical system should take care of the rest of our profits, and then it's just basically the action is just to follow the process. It's quite interesting. I had like 3 or 4 different reminders over this past week that said, follow the process, follow the process, follow the process. That was the essence of these things I was reading. And I'm just sitting there going, okay, what's this trying to tell me? And so it's always good to be refreshed and reminded, stick with your process, stick with what works, and don't go out there being impulsive and trying to force things, because when we try to force things, the market tends to rip it off where we don't want it ripped off at. So I presented this chart last week. I think it's a great chart. It kind of covers the a simplified market cycle, and this shows basically what some of the feelings are, the emotions that can be felt during a market run-up into a bear market, bull market, bear market, and then the setup to go back into another bull over here. And so I asked last week, where are we kind of at? I think we're kind of at the complacency stage where we're kind of, I think now wise traders like you guys are aware that the complacency stage isn't necessarily a good place to be in, and that it could lead to more drops to the downside. And the other thing I like to drive home on this particular chart is these issues here: disbelief, anger, depression are all, when we start experiencing, or we hear some of our friends that are experiencing these kind of emotions, it's time to be sitting there going, okay, well, the market may be getting ready to turn back around. You can learn a lot about where the market's at by listening to your friends, and what kind of emotions that, and it's not a bad idea if they're not, if they are just normal, I would say retail type investor, ask them how they feel about the market and then take note. And so just a little tidbit there, and you'll be interested in what you find out. So where do you think we are? As I said, we had a nice big run up starting back in, I think this is 2016 after the last, correction. Nice pull up into some congestion, but it looks very similar to, is this the period of complacency before we, potentially go into a more severe correction? We'll see. Would not be surprising, given how well things did last year. In 2017, definitely outperformed a post-election year by all standards. And so we're getting a little bit of a lot of volatility here working out, and it just looks like it wants to roll over. We do have a lower high in place right here, and we'll talk about that shortly. So stocks are basically, this should be April 22nd and beyond. Seasonal expectation, volatility continues high. Wide ranges moves continue. There seems to be very little traction. We are stuck in a trading range, waiting for setups on JNUG and JDES to sit out as bonus trades. We did get into a bonus trade on Grub last Friday. Sent out the alerts on that, and this was a bonus trade so the alerts went out to everybody who is a active trend trading member, including the folks who are, basically the free members who just look at the weekly newsletter. And so we've got a T1 up here at 107.40. We have earnings. We will close this complete position out by 4:30 because earnings are before market opens on 5/1. Strategy 1 and 2, we're looking at 7 ETFs, then Netflix, Tesla, NVDA, YY, BABA, and Grub are the core stocks that we're kind of trading right now. The active trend trading system has 3 strategies. And 3 strategies. We have 4 entry rules, 6 exit rules. Strategy 1 is a portfolio building strategy. Strategy 2 is income generating strategy. Currently, taking what we've gained in strategy 2 and dividing by the number of weeks that we've been trading it, we've averaged about $488 per week. Now, some of that's been larger weeks. Some of it's been, shallower weeks. It's like a commission type job, but we're coming close to hitting that $500. We're only at risk with $10,000 in strategy 2, so keep that in mind. Doing some option trades in there. And then strategy 3, which is our foundational position, using the leaps on spiders, Tesla, and BABA. And this is intended to basically be both a capital growth and a weekly income type trade. So the weather over here in Hawaii is looking like this today, so it's quite a nice day. Let's look at some charts. Okay, I wanted to show everybody one thing. Well, now let's go ahead now. I will show you that before. There we go. Okay, spiders. Daily, weekly. On Friday of last week, the thing that I was talking about, what happened was the TSI crossed over. We had a TSI tick down here on basically a tick down right about there on the 19th, as it was Thursday, and a cross on Friday. I talked about in the newsletter, I said if we get a pullback up into this midsection here, and sure enough, you get a little bit of a pullback first thing this morning up into, and this number here, this 267.87, I had drawn that in. I had basically drawn this 267.87 in based off of just some of the past highs. And so it was just sitting there. And so that's how we can basically identify levels or zones and say, okay, if price action gets to that, I want in. And sure enough, if somebody would have got in on a trade like that this morning, it would have been a good trade. Buyers did come in toward the end of the day, but the range on this candlestick right there is about $2.50. And so there's where the volatility is working up. Now, price action did push back up. We're still below the 50. And so the essence of the learning aspect of this is when you get the cross, when TSI is up here between approximately 20 and the positive 50 or higher in that zone, and it's rolled over there before, be paying attention. Be paying attention, because if you get the crossover, that can be indicative of that's when it's time to start taking, either one, take your profits off the table of things that you already open on, and two, maybe start planning some downside trades. And so then what do? We basically wait for it to get down into the lower reversal zone. We like it when it gets between -20 and -50 or below -50. That's when we get the stronger of the signals. That's when we get the stronger of the signals that result in the more long-term moves, but also the stronger moves. So spiders, that's what I'm looking at right now. We've got a little bit of cross currents here in that the true strength index on the weekly has crossed up. And so is it going to power up to the downtrend line, or is it basically going to reverse down lower and go down to a new low on the TSI for the weekly? We shall see. QQQ, almost the same exact pattern. TSI crossover on Friday. Look at what happens. We could paint in here and say, okay, if price action gets back up to 163 to 163.78, that's when you might be interested in well, that was been for today. It's when you might be interested in getting to a short position. However, look at what took place in the past. What would tend to happen is we were falling. Price action would go up into the midsection of the previous candle and then fall from there. And if you take a trade like that, where should your stop loss be? Well, right at basically the high of the candle that is triggering the trade. That should be your stop loss. It's breaking out past those moving averages. Go ahead and just close the position out if you get 25 to 50 cents above that, because you can really carry a tight stop. Because if this is going into a downtrend, the high of this day should not be violated. And so TSI crossed over. Similar type situation on the weekly chart. TSI going up just a little bit, and we're just kind of hanging in there at the that would be the 20-period moving average, which equates to approximately the 100-day moving average. As you can see, bounced off the 100 today. So I would wait until we get a, like we may get, it may come down here and, just put a base in here. It's about the 160 or the 161 level, and just hold on to that. It's going to either flag to the downside, or once we get the momentum tick up on the TSI, that's your clue to say momentum is shifting, time to move into that position. IWM, same. Okay. IWM stronger than the other two entities. Pulled back down into the 20. It is above the 50, so that's a positive. If the market does reverse and start to move higher, look for IWM, which means take a look at TNA. to trade it to the upside. Whoops, not TNA period, just TNA. To trade it back to the upside. Again, it is holding above the 50. So like I said, if I was trading to the long side, I'd be looking to TNA or IWM or TNA to the upside. Does that work? Yeah, Joe asked that I put on that URL to print out the chart for the market psychology. I sure will. Matter of fact, I'll do that right now. It'll take me 2 seconds. Whoops. Take me a little bit longer, 2 seconds. Let's go back. There you go. It is www.wallstcheatsheets.com. Cheatsheets.com. Okay. Let's go back over here and where's my other? Okay, let's look at. I want to look at 5 entities and then we'll basically call it a day. And it's going to be quick and dirty. First of all, I want to take a look at USO, which is the oil stock, oil ETF. And here's what I want to look at. I want to look at it on the, there we go, yeah. As we can see, USO has moved up very nicely. It has broken out from its congestion about the $12 level up to about the $12.50 level. The reason I want to show you this chart is because if we continue moving up, if we come back and get a nice pullback, or you can actually just draw a gosh darn line across here. Okay, just lay that in place. And any bounces off of that line, that would be okay for a trigger also. And so a trigger to get in right there. Basically bouncing off of there. So that's one. Secondly, I want you to highlight, okay, here you broke up above this area right here. Now I'm going to throw up. I'm going to throw on the UCO, and you will see the difference between the leverage and the non-leverage ETF. As you can see, it as the price action here on the daily chart has just barely made it above the this shooting star candle over here. While so what that is talking to is the backwardation and or the backwardation and or contango of a leveraged ETF. Again, let's take a real quick look at it again. As you can see, regular chart has already had a very nice breakout and move higher, and UCO has had the breakout, but the moving average, the movement has not been, it's just barely broken out. And so that's where the difference, is on the entity. And I'll just basically, I'll draw a line across. That's not going to be absolutely perfect, but it'll still give you a nice little a snapshot picture of that difference. And that's why you have to be very careful trading the taking your signals off of the non-leveraged ETFs. And as you can see, I can actually just take this and move that up to the same area. There we go. You see, this is broken out nicely above it. And so just to keep that in mind. And so anyway, I tell you, Joe, send me an email and I will email you that chart. Okay, so let's get rid of the drawings, go back to the other chart. So there we go. Is that correct? Yes. So Grub. Okay, Grub got a really aggressive move this morning. All the moving averages are all pointing up. This is a pre-earnings trade. We entered it on Friday, bouncing off of this moving average. We picked up at about the 102.10 level, and so it actually broke above 105 today. Didn't hold the breakout though. So over the next couple of days, yeah, that could be kind of concerning. But if it, my target, and I'll show you where my target is. My target is to take, my target is to basically let the prices run all the way up here into this, I put in a target of 107.40 to take half the position off. But as you can see, let me see if I can get this in there. As you can see, the selling from last time when it came down to this area actually started up at about the 106.58 level, 106.60. So I'm going to watch this tomorrow. If it gets back, up towards today's high or goes a little bit higher, I'll put a trailing stop just below, just at 105 or just slightly below 105 on half the position, so that it's either going to sell out at 107.40 or coming back down through 105, because I want to pull in that, those dollars off of the pre-earning run, and that would give me about a 2.5 to 3% gain. If I get up to 107.40, that's going to be a 5% gain, and that's what we target on the pre-earnings run. And so, any questions on that? That's what. Now I'm going to play that tomorrow. I will still leave the other half of the position in place. It has a stop loss under, I think, down here at $99 or something like that, or $95, 90, I think, around there. And so what I'll do is I will leave the stop loss in place on the other half of that. But if I do get taken out, I will move that stop loss to break even on the second half of that, and then wait until Monday. That would be Monday, April 30th, to close that position just prior to the close. JNUG, gold has been getting the heck beat out of it over the last couple of days. And so has the gold miners, and so we may be getting a drop down into this 13 to 12 level, and the gold, and just take a look at the gold futures. Yeah, it's holding the 100-day moving average. However, it has slipped down into this lower level of support, and we'll see it get a rebound. The TSI has just turned over, so it could in fact drop below the 100 and down into this lower level. And so we'll be paying attention to that. I've got alerts set that if it gets down to this lower level, that may be the trigger to get us into the longer term trade on JNUG. Now, some people may want to trade, look at JDust, but JDust has popped up. Just be paying attention to these TSI crossovers. And it's been gapping, so it's got its own downtrend that it's working off of right here. And so it's again, I wouldn't buy it right here. We'll see if we get a pullback into the somewhere between 46.5 and 45 in case JDust wants to rally. But remember, June, July is when gold tends to go into a large, into its basically buying mode into the October and September, October timeframe. YY, I'm keeping an eye on YY for earnings run. Earnings are scheduled for 5:10, and so this means I want to be making a decision on YY on how I want to trade this into earnings by April 26th. The thing that I like about what YY is doing, it is really close. It's in this level, in this zone of demand and support. And so if it hangs on here at or pulls back into the 90 level, I would look at getting into a position. The weekly TSI looks like it wants to turn over. We have already had a turn up on the TSI on the daily chart. And so it's a legitimate area to look for an entry. Excuse me. Again, that would be pre-earnings, expecting a 5 to 10% run on that. The other one, let's see, did we talk about Grub? We did talk about Grub. We talked about YY. A couple of other ones that I just want to highlight. Also, I want to highlight, and this is another one of those situations where we get a crossover on, we get a TSI tick down last Wednesday on NVDA. On Thursday, on a Friday, okay, Thursday, Friday, we get the cross. Now, look what happens both today and yes, on Friday, it went, price action went up to the 50-day moving average or the 8 or the 20, that cluster there, and then sold off. And so once we get this cross, if we are familiar with how does this stock or how does this ETF, how has it reacted in the past when it has the crossover? Do you get a little bit of, do you get a trade? And the answer, the question you're trying to ask yourself is, do you get a tradable pullback and then a new setup? And how long is the setup? How long does it take to get the setup? And how do you determine that? That would be a setup to back to the upside. Well, the way you determine that is basically just go to where it crossed last time. Put your cursor there. Go to where it crosses back up. Well, how long did it take for it to cross back up? Well, about 15 calendar days for the first cross up. Then for where it actually crossed back over, about 22 days. And so that would be 16 bars, which would be 16 trading days. And so that's something to just keep in mind. So we just had the cross here. So I can go out here 16 days approximately. We might be able to go quite 16 days, but I can go out here. Yeah, I can go out here 16 days. And we can say, okay, somewhere around 20 days from now, which would be here. Well, shoot, Dennis. Maybe around right about there on May 5th is when we may get a bounce back up on this. But we're looking. NVDA also has earnings coming up on 5/10. By Thursday of this week, I have to be making a determination on what I'm going to do earnings-wise for NVDA. The other one, something similar, Netflix. Netflix has just been a beast, but it too is getting a nice pullback, TSI, tick over, and there's a perfect example how you get the TSI tick over, tick down, and crossover and tick down. And then what happens? Price action moves up into the midsection of the previous candle if it's a big one, and then proceeds down. Sometimes it'll do that, or sometimes it'll do what it did over here, where you get the, here's the TSI crossover here. After the cross, it tends to get a little bit of a price up into the body of the previous, red candle, and then the drop. Why is that? Is there's some residual buyers that are still hanging out who want to get back and get into this stock. And the people who are wanting to go short are finding that, there's these guys who want to buy this. Well, I'll sell them, I'll sell them some shares. And they're the people who are selling the shorts. So let's see. SVOG, Netflix we talked about. Hey, I covered everything that I need to cover. Is gold being affected by the conflict in Venezuela? I don't know, Eric, if that's what's going on or not. All I know is gold's been getting, over the last several days, it has gotten beat around the head and shoulders. Beat around the head and shoulders. Just real quick, Baba. Like Baba from an earnings trade. Okay, what's it looking for? It's looking for support. It may have found it today, but you got a TSI crossover on the daily chart, which could take it a little bit lower. Where might it go? The origin of its past buying is right where it's at right now. However, so you may be looking in the middle of this this section here, or even down in between 171, 170. Depending on what this tick up. Now these tick up, okay, this could find support here at the zero line and just bounce right off of that. Tesla had some, Tesla is just hair triggered to the reaction mode. TSI has crossed over, but we found support at the 282.51 level. Is it going to bounce up enough and bounce up after this? It has been reacting where it's finding support here and then it reacts back up to at least to this downtrend line, or in some cases a little higher. So we know it's got resistance at a couple of places. One is the 293, 294 level all the way up to 300. So we could see a move up to there. And so just pay attention to the pre-market, and if Tesla is painting up, typically it will basically gap up and run up, similar to how it did here, similar to how it got a big down day here, and then the next day you get a gap up and a run up. That's just the way Tesla is working. So okay, hey guys, sorry for going a little bit over. But there was there was just some really good stuff I needed to get out there and show you, and trade well the rest of the week, and we'll be looking for those other opportunities, and hopefully Grub will come in and provide us that 5% gain prior to earnings, so we can close that position out and reduce our risk. So, okay, everybody, God bless everybody. Have a wonderful week and aloha.